Everyone is Nick with Us versus Herd. If it's your first time here, you like the content, hit subscribe. If you want to get notifications from when we go live or post videos, tap the bell. And if you want to join UVH fam, our community, links below for our Discord, along with our free options trading group on Facebook and our Patreon. What I'm going to be getting into is some tips on trading spreads on Robinhood. But before we do that, you want to make sure that you have approval to do so. So what you want to do is once you're logged into Robinhood, this is the same on mobile as well. I'm just using the web platform because it's a bit easier for me to navigate for this video. You'll go to account and then go to settings and then click on options trading, and you can see everything that you're approved for. And before you can sell spreads, buy and sell spreads, you want to make sure that you have approval to do so. So you want to make sure that you have a little checkbox here. If you don't, you'll have a button here that says upgrade, and you will be able to request that approval from Robinhood. You know, they're usually generally pretty quick, but I've had people in the past tell me that they don't have approval, or they might not even have options approval yet either. So you want to sign. You'll have to sign up for options and then upgrade it to buy and sell spreads. So what we're gonna do here, we're gonna get into it. Robinhood's not my main broker, but I know that there's a lot of traders that are starting out on Robinhood who still use Robinhood in the UVH fam. So I've been buying and selling some spreads within Robinhood, and I just wanted to see, you know, kind of what you guys are going through, and I know in terms of spreads, Robinhood's definitely not the easiest to perform a trade on. You know, I have a couple spreads on right now. I have one debit spread, I have one credit spread. We'll be going through it. But what I mean by that is their order execution is a little bit slower. But that doesn't mean you can't be successful. That doesn't mean you can't be successful buying and selling spreads on Robinhood. So going to go to SPY. The one thing that I want to say is when you're trading on Robinhood, you want to make sure that the stock has good volume. You want to make sure that there's good volume on the strikes that you're trading. And that goes for pretty much any platform, but Robinhood especially, since it's a little bit slower to perform a trade. Let's go to the 25th, because you can't, today's expiration day, you can't trade day of expiration on Robinhood. You can only close trade. So if I had a trade open for today, today's expiration Friday, if there was a trade I had open, I could close it, but I can't add to that position. So one thing that I want to talk about first is debit versus credit spreads, what the difference is, how to calculate max loss. I'll do debit spreads first, but a debit means that they're going to take the capital out of your account. It's going to cost you money. Credit means you receive a credit. Like if you have a credit spread, it means you have a credit for that spread. So essentially, debit means you're paying for money. Credit means you're getting money. Now, how you make money, how you lose money, they're completely different. So what I'm going to do here, one of the easiest things, I'll do debit spread first, and then I'll do credit, because credit's the reverse of debit. So I'm going to actually, let's say I want to short SPY today, and I'm going to do a debit put spread. So debit put spread, let's see here. I'm going to buy one put, and I'm going to sell. So for me, sorry, Robinhood. So like other platforms, they give you the ability to like right click and put on a spread. Robinhood, you have to put spreads on manually. You have to kind of piecemeal together. The easiest thing for me when doing a spread on Robinhood is doing the leg closer to in the money first. So when I want to do like a debit spread, I'm going to buy the leg closer to in the money, and then I'm going to sell the leg further out from the money. So what I'll do is hit buy, and this is going to be a debit spread. And let's say by October 28th, which is like Monday, I believe SPY is going to be, I think SPY is going to be under 300. So I'm going to buy the 300 put and then sell the 299.5. And as you can see here, it's going to cost me $11. The one thing is, so I'm gonna have to pay $11 for this, since it's a debit. I'm gonna pay $11 for this trade. Now, one of the confusing things for me within Robinhood is determining hey, how much money can how much money can this trade make? How much money can I how much money is so it's going to cost me $10, $11. How much can I make? But kind of show you an example here. I'm going to bring up Tastyworks and I'm going to go to October 28th. I'm going to do the same trade. So I'm going to buy I bought the 300. I'm going to sell the 3. So now this will definitely help you. So as you can see here, it's the same price, 10, 10, and the max profit is going to be $40. How do you calculate that in your head on the go? So it's always going to be the width of the strikes, right? So if the width of the strikes here are 50 cents, it's going to be a total of $50. So if it costs me $10, my max profit's going to be $40. Do you kind of see how that works? So let me actually pull that up for you. Okay, so let me. Okay. So width of the strikes equals 50 cents. You multiply it by 100 because one contract equals $100, okay? So the width of the strike, debit, we'll just call it 10. Debit's going to be 10. So you deduct the okay, and then it's going to be 40. Okay. Okay, so you kind of see how that how that works. So the width of the strikes. Now, if I change the width of the strikes here, let's say I'll get rid of the 299.5. I'm gonna buy the 299. You know, it's gonna cost me more money, right? Oops. We want to sell that. Sorry. So you'll know that you did the order right if it says right here put debit spread, because Robinhood will recognize it. When I messed up, you can see here it said 2 option order, and then you can look here. So if it's your first time doing this, whether you're doing a debit spread or credit spread, you don't want to rush through this, because if it says 2 option order, you definitely did it wrong. You want it to say what you want it to do. So it's gonna recognize that you put debit spread in here. So as you can see here, so now this is gonna cost me 18 cents, right? So then what's my max profit on 18 cents on $1 wide? Okay, so let's do it again. So $1 wide. So we're gonna do $1. It's gonna cost me 18 cents. So max profit is 82 times 100. Oops, this should be 40, not 400. Sorry. Equals $82. Okay. Now, if I go to Tastyworks and do that same trade, it should reflect that. So I'm going to just move this up, and you can see how easy this is on here. So yeah, you can see here 18 is my max loss, max profit's 82. Now with a debit spread, you want it to go in the money. So when I'm doing a debit spread, when I'm doing a debit spread for puts, that means I'm actually short the stock. If I'm getting a credit for this, that means I'm going to be long. So if I am short right now, I want this to go, you know, obviously I want it to go below 300 for this to make money. So I want to go below 300 in order to make money on this trade. Now, if I do a credit spread, so let's say I want to do a credit spread, that means I'm going to be long. So if I always like to do the sell version, the sell order first. So let's say I think that it's going to be above 300, I will then sell the 300 put and then buy the one that's further out from the money. So it always helps me. And then you can see the order right here, it says put credit spread. So when you receive a credit, opposite of a debit, my max profit that I can make on this is 11 cents. And my max loss, now that I have 50-cent wide strikes, is going to be the 39 cents, right? So we'll call this, if this is 10 cents, the max of the width is going to be 40 cents, and I can kind of show you here again. So let's say I wipe this out. Now I am going to be long, so I'm going to short the 300 and buy the 299.5, and you can see my max profit here, 11. We'll change it to 10 just so you can make it nice round numbers for you. So my max profit's then 10, and the max loss is 40. So the goal of a credit spread is for it to expire out of the money and be worthless. You want the options to go to zero. You don't want the option value to increase, because if the option value increases, you're going to have to buy that back at a higher price than what you sold it for, right? Okay, so let's say we want to do this on the call side. So if we want to do it on the call side, so if we want to do a debit spread and a credit spread on the call side, what does that mean? A debit spread on the call side, which means we're going to be long. We're going to be long, let's say SPY right now. So let's say I think SPY is going to go up by October 28th. I think it's going to be above 301. What I will do, I will buy, let's say the 301. I think it's going to be above 301, and I'll sell the 301.50, right? So my total cost here is going to be 23 cents. My max loss, let's call it 25 cents. My max loss is going to be $25 as well. So just so you guys can see again here the way it calculates. Let's see, I had the 301, bought the 301, sold the 301.50. So let's just go to 25 so you can see. So this is kind of like a very one-for-one trade in terms of debit. Now, let's say I want to execute this order, and I hit 1, and let's just say I do 24. Now, you'll see my max cost is going to be just $24. Now, where things get a little bit tricky, we'll talk about this in a second here with a credit spread. Let me wipe this out. So if I want to do a credit spread for calls, that means I want SPY to go down. I'm actually going to be short SPY. So I will actually sell the one closest to in the money, and then I'll buy the one furthest out from in the money. Now, this is where things get, I think, a little bit tricky on Robinhood. So I'm going to get a credit of 24. I'm going to put this order in. It says minimum credit I'm going to get is $24. So now you can see here the collateral they're going to hold is $50. Now, $50 is not your max loss. $50 is not the amount of money that you're going to lose on this. Collateral is the amount of money that Robinhood is going to hold from you to execute in buying power to execute the trade. If this trade goes sideways, they want to make sure they're able to cover max loss, which is a bit higher than other brokers. How do they calculate this? They just calculate the same way we did with the width of the strike. So if it's 50 cents, it's $50. If we go to, let's say I want to do one further out. Let's say we'll get rid of this one and we'll buy this one. We'll buy the 302. Why did it not? Okay, there we go. So it shouldn't remember that I had this order in like that, because now you can easily, so because I typed it in the order, it remembered my last order. So the limit price should have changed when I dropped that call. But just pay attention when you're trading on Robinhood. You got to pay attention. You want to take it slow. So if I hit review order, now you see the width of the strikes, just keep on point here. Width of the strikes is now $1. They're going to withhold $100. Even though your max loss, so your max loss is not going to be $100 here. It's it's always going to be the credit you receive minus the width of the strikes, right? So we're going to put the same trade on over here. Let me just clear this. So we sold the 301 and we bought the 302. And as you can see here, for this trade, your max loss is going to be $58, not $100. So Robinhood's going to hold $100 in collateral in buying power from your account to execute this trade until you take that off. However, your max loss is only going to be $58 here, as you can see. So that's where things get a little bit confusing, especially when doing spreads. And if you're comparing yourselves to others or talking about brokerages, trades, and people are in different brokerages, this is where I think people get pretty confused about the amount of collateral. What's your max loss? Like, Robinhood doesn't tell you what your max loss is going to be for these trades. They don't tell you where it's going to be. You know, for a debit spread, pretty easy to remember because you're going to lose whatever you pay. Now, for a credit spread, it's a little bit more tricky because it's the reverse of that. So you're going to get a credit. However, your max loss is going to be higher because of the width of the strikes. So let me go back here. Let's clear these trades out. Now, let's actually look at some of the volume here. So when I was talking about earlier, one of the things is volume is you want to make sure, like for me, I want to make sure volume's over 500 for the strikes that I'm going to do, and you want to make sure there's a pretty tight bid-ask spread. You don't want to put on trades that have like volume is 3. Let me look at like something. Now let's do like this one has 145 volume, not the greatest, but if you look here, the bid's 299, the ask is 310. You know, on Robinhood, it's going to be hard to fill orders like this. I mean, it's getting a little bit tighter now as we speak, but it's going to get harder for you to execute orders. Now, if let's go back to SPY. So I want to do spreads on very liquid stocks. Let me actually put an order in here. Let's say I'm going to be let's be short. Let's be short. Well, for short, let's buy a debit spread. Let's buy a debit spread for Monday. So I'm going to buy a debit spread just because I like my odds a little bit better. Premium is kind of cheap right now, so one of the things is you want to make sure. They don't really tell you this on Robinhood what implied volatility is. They do tell you a little bit here, 6.9 and 1% per each strike, but they don't tell you what the implied volatility is for the overall stock. Let's see here. Did they show you here? No. So, you know, Robinhood is good at some things, but they wanted to make it easier for traders, but at the same time they left a lot of information out for more complex strategies that you want to do. So what you want to do here, let's say I want to short SPY for next week. I'm going to get a debit spread. I'm going to buy the 350. I'm going to sell the 300. And oops, I'm sorry. I actually want to do the puts. Sorry. So you want to make sure. So to be short on a debit spread, you want to do the puts. So what you want to do is you want to buy the 350, sell the 300, and now we have a put debit spread here. And my total cost is going to be $15. The width of the strikes is going to be, you know, we're going to be making $35 on this. So nothing huge, but for example purposes, let's try to execute this order. Now, just so you see, this is a pretty tight bid-ask price. I'll try to get mid-price. And let's see if we get filled. Because I haven't executed an order here, so this is going to slow me down. Got a little bit of security on here, you know. Okay, so I placed that. Now, if you place the order don't think it got filled. It just says placed. It doesn't mean it was filled. It'll say filled when it gets filled. It'll say 0 out of 1. It should say 1 out of 1. So that's where some people get confused. They place an order that never actually got filled. So right now, sometimes you got to give it a second, but I try to hit mid price. Maybe it changed while I was doing the order. Let's hit the one thing that you can't do is just like a cancel and replace. I mean, you can do it here, but it's not. If you leave that screen, you have to go to your account, go to history, cancel the order, and then do it. So it's best to stay on this screen while you're executing the order. It's gonna make me want to go to the ask. I mean, you can leave that order, but for video purposes, I just want this to be a little bit quicker. So as you can see here, we are stuck. We got filled here at $16. So now I'm actually short SPY for Monday. My max loss is going to be $16, and my max profit, is going to be $34 on this because it's the width of the strike. So I know it's a bit confusing. I'm going to be making some more videos about credit spreads. I just wanted to give a quick video on some tips and tricks that kind of help me do spreads and more complex trades on Robinhood. If you have any questions, always leave a comment. Hit me up in the Discord. I'm there all day, every day. As always, stay safe, stay green. It's us versus herd.